CDs are also FDIC insured, but T-bills are more tax efficient than CDs because the money that you earn in CDs, you're taxed on that interest that you earn. Hey everybody, welcome back to another video. Today I'm going to share with you the best short-term investments for 2026, and I'm going to give you my top options and ideas where to park your cash safely with zero market risk. And let's imagine this situation where, let's say that you're making good money, you got cash sitting in your checking account earning practically nothing. Now, every time you search for the best place to park your cash, you get overwhelmed with 1,000 different opinions, options, and you become overwhelmed and you end up doing nothing, right? At the end of the day, the result is that your money just keeps losing purchasing power every single day. So my goal in this video is to cut through all the noise and give you the top options so you can start taking action today. Now, with this being said, there's really only 3 places that are relevant in my personal opinion. And I know that personal finance can be it can be complicated, but it's not really as complicated as some people make it out to be. So there's only 3 places that we're going to be looking into today. And these are very almost zero risk options. And the number one nowadays is high yield savings accounts. It's simple, safe, instant access. Then cash management accounts. Maybe you haven't really heard about these, so we're going to get into those. And then we're going to get into T-bills, Treasury bills. And there's one more that I'm going to be sharing with you towards the end of this video. And I'm going to tell you why it may not be the best idea, right? So I'm sure you're going to learn something here. So this is going to be a very simple framework. Now, the first option is something that I've gone over multiple times in the channel, and that is high yield savings account. So if this is the first time you're hearing about these are amazing options that anybody can open one. And it's just like a regular savings account, like that you open at your local credit union or bank, but it's mainly online, right? Like these types of accounts are mainly provided by online institutions. And currently they're paying between 3.5 and 4.5% as of November 2025. Now, the key benefits of high yield savings accounts is, of course, the FDIC insurance up to $250,000 per account per owner, and also the access to instant transfers from same day or next day. Most banks out there take about 1 to 3 business days to make the transfer for you to access your money. And the way I like to see this is when it comes to short-term savings or investments, they're best for emergency funds, 3 to 12 month savings, and also cash that you might need on short notice, right? So maybe you need money for your car, or maybe for a pet bill, maybe a medical test, or maybe for a house down payment that is going to happen in the near term. So these are great options right there. And I'm going to leave a link in the description for my top high yield savings accounts. Now, the catch is that these rates for high yield savings accounts can drop when the Fed cuts rates. But right now, they're still crushing it more than the average national rate, which is around 0.4%. Sometimes I've even seen 0.01%. Like, it's absolutely crazy, right? Like, it's just, man, savings accounts are wild sometimes. Now, the second option I would love to share here with you is cash management accounts. Now, cash management accounts, I ran into them maybe about a year ago or so, and they really caught my eye because they're great options if you're somebody that wants to earn high interest and still want to have the benefit of a checking account, of bill pay, transfers, like anything, right? Like if you want to do everyday banking with a high yield account, then this can be perfect for you. Especially also if you want to use investing features, if you want to buy the dip, right? They're great for that. So what it is this is a brokerage account combining checking features with high yield investing or savings. The way I like to see it is a hybrid between checking and high yield savings. And most automatically sweep cash into money market funds. That's how you are able to earn that higher interest. Now, the current rates of these accounts are around 3%, 4%. And one very popular that I talked about here in the channel is the Fidelity's SPAX, SPAXX. Schwab also has its own money market option, but the way it works is the same, right? So you can open a brokerage account with Fidelity or Schwab. You can put your money in a money market fund and still write checks and use debit cards. And you can also get ATM fee reimbursements. And these are great for people who are always on the road and you are using foreign ATMs, out-of-network ATMs. These cash management accounts and these brokers reimburse you for those, which can be very advantageous. It can save you a lot of money, right? So of course, for full transparency here, we're going to go just a little deeper into cash management accounts so you know exactly what you're up against and what you are getting into. because money market funds, which are usually the vehicle that these brokers use to invest your money and pay you the high interest, they're not FDIC insured, but they invest in ultra low, ultra safe, short-term debt like Treasury bills, right? So you're essentially giving a loan to the government. And they're extremely stable. Historically, they've only broken the bug, which is when they lost value once in 2008. But there have been reforms since then that have made them even safer. So they do give you access and liquidity. They give you immediate access, transfer out the same day or the next day, just like a bank account. So who should use this account? It's professionals who are already using a brokerage account. It could be a good option for you. Also, if you have larger balances, seeking flexibility, right? Anyone who wants ability to invest quickly when opportunities arise. So as I mentioned, if you want to buy the dip and you see the stock market going down and you're like, hey, I got to make a move right now, then cash management accounts can be perfect for that type of situation. So at the end of the day, the catch is, of course, that it does take a little bit more work to set up. A high yield savings account may take 5 minutes, 6 minutes to set up. This one can take like 10, 15 minutes, just a little longer. And the process can be a little bit more complex because now you're signing up for a brokerage and you're going to need a little bit more information, right? So that just gives you here some perspective. Now, with that being said, the third option I would love to share here with you is Treasury bills, short-term Treasury bills. Remember, the big picture here is short-term investments. Now, and what this is a loan to the US government that matures in 4 weeks, 8 weeks, 13 weeks, and so forth, right? So currently, right now, they're offering around 4% for a 1-month T-bill. And these give you maximum safety because they are backed by the full faith of the US government. So this option right here does lock your money for a certain period of time. But the beautiful thing about it is that you get to pick how long you actually want to lock your money for, right? So it could be, as I mentioned, 4 weeks, 8 weeks. And that is very different than another option, which is the certificate of deposit CD, which I'll get into here in a second. So this right here is for money that you know you won't touch for at least a month or a couple of weeks, depending on how long you set that time frame for. And they also give you maximum safety with short-term horizon, great for laddering multiple T-bills for predictable cash flows. Now, laddering is a very simple concept where you essentially open multiple T-bills with different maturity rates. So you can have one expiring in 4 weeks, then you can have another one expiring in 8 weeks. So essentially every 4 weeks, you get one expiring, and that way you can maximize the highest interest available at the time of opening that said T-bill. So it's very, very simple, and a lot of people like to take advantage of that to maximize their interest. Now, of course, the catch, everything has a catch. Is slightly more complex to buy through treasurydirect.gov or your brokerage. Now, one insight I want to share here with you is do it through your brokerage, do it through Fidelity or Schwab or Vanguard, because I have seen people complain how Treasury Direct can take, it's a little bit more cumbersome. So just do it through your broker, and that's going to save you time and achieve the same results. Once you do buy it, it's very easy. Money is tied up until maturity unless you sell early. So here's the side-by-side comparison amongst all of the options that I just shared. So we have the high yield savings, the cash management account, and of course the T-bill. And these are overall yield or interest for 2025, and they are going to be changing as the Federal Reserve, of course, keeps lowering interest rates over the last couple of months and who knows, even years. Now, the risk level as well is very low to zero. So that gives you right there a sense of security and peace of mind, and the liquidity also something that you may be paying attention to, because high yield savings and cash management accounts give you immediate liquidity, and the T-bills, it can take a little bit longer, right? A maturity date, which can be a couple of weeks or 8 weeks, depending on how long you set that up for. So here's overall where each of these options excel. For high yield savings emergency fund, everyday reserves. For cash management, brokerage uses larger balances. And these two overlap a lot in my personal opinion, the high yield savings and the cash management account, and the T-bill, of course, for ultra short-term maximum safety. Now, the winner for most people, I want to say, is essentially the high yield savings account. It's the simplest, least complicated option. So if you do nothing else after reading this, at least set up a high yield savings account in 10 minutes or less. Now, with this being said, you might be asking yourself, hey, Alex, but what about CDs, man? What about CDs? Now, CDs are very similar to Treasury bills where they lock an interest rate for a certain period of time, but usually they give you longer time horizons. CDs can be between 3 years, 3 months, it could be 6 months, 9 months. So they're not weeks typically like T-bills. CDs are also FDIC insured, but here's the kicker. This is something that I've learned over the last couple of months also. So T-bills are more tax efficient than CDs because the money that you earn in CDs, you're taxed on that interest that you earn. So if you live in a high tax state like California, for example, then you will be better off with a T-bill, which has more tax advantages than a CD. You don't pay local or state taxes with a T-bill. So that's amazing right there, of course, depending on how much you have, right? So for short-term money, maybe 12 to 15 months or less, then the flexibility of a high-yield savings account beats any tiny advantage of a CD, unless you have T-bills, which the process is a little bit longer, but you do get tax benefits. Now, with that being said, short-term cash doesn't have to stress you out. So just pick one of these options, move your money this week, and then feel your cash working for you. So here's your action steps leaving this video. So design on your timeline. If it's a maybe tomorrow or next week, go with a high yield savings. If you already use a brokerage and won't need it soon, then check cash management account. If you are sure you won't touch your money for a month or more, then consider T-bills. Yeah, so once you decide on your timeline, then you're just going to open one account this week, whether it's a high yield savings or a T-bills or a cash management account, depending on which one is for you. And then you're going to set up your automatic transfer where you will start moving money automatically into your account, right? So at the end of the day, you don't have to be perfect. You just need to take a first step towards making your money work harder for your family. So which one is for you? I would love to know. Do you have any questions? Let me know in the comments below. And if you're interested in opening a high yield savings account or a CD or a T-bill, whichever one is for you, there's going to be links in the description of this video. Make sure that you like it, subscribe, and most importantly, share. I'll see you guys on the next one. Thank you for being here. Peace.